if you are over $250,000 a year, I
Yeah.
highly, highly recommend you work with a professional. There should be no reason why you're doing this DIY services.
Mm.
What was available last year may not be available this year.
Yes.
It changes every year. And then you submit your tax return, and all of a sudden, you're sticking out like a sore thumb because the
Mm.
laws changed. You're going to get audited. And again, audits are no fun.
Welcome to another episode of the Business 101 podcast, where we unpack the real stories, strategies, and stumbles behind building and growing successful businesses. Today's guest, Tanya Akimenko, knows that behind every thriving business is a financial story most founders overlook. With 20 years of experience and a front row seat to hundreds of business owners' books, she's made it her mission to simplify accounting, demystify taxes, and help entrepreneurs actually understand their numbers. As the founder of Golden Apple Agency, Tanya is flipping the script on bookkeeping, turning it from a year-end headache into a growth-driving advantage. If you've ever shoved receipts in a drawer or nodded through a tax meeting you didn't quite understand, this conversation will shift your mindset on how you run the financial core of your business. With all of that being said, let's make welcome Tanya Akimenko. Welcome to the conversation, Tanya.
Thank you so much for having me. Happy to be here.
Yeah, good to have you. First, can we talk a bit about your background? So, how did you get to where you are today? What's your business story?
Yes, so mine's very unusual. I'm
Okay.
gonna give away how old I am, of course. But back in the day, before the fast internet, I
Yeah.
lived in a small town, Delta Junction, Alaska, in the
Mm.
middle of nowhere, and the nearest accountant was 2 hours away. And I was working at a bank, and my ex-husband started a construction business, and now all of a sudden we needed payroll services, we needed this, we needed this. And I was working at a bank as a supervisor. I was like, you know what, I'm gonna have to learn this because again, no internet. So
Mm.
we'd have to drive the 2 hours and things like that or fax it over.
Mm.
And so I was like, you know what, I'm gonna learn this. And I started learning long distance. That's back when I had to mail my tester, get mailed books. There was no fast internet to do the online classes like there is today.
Mm.
And so that's where I started. And since I was working at a bank, more and more people heard about it. More and more people was like, hey, can you do my payroll? Can you do my taxes? And so that's where I started in the middle
And
of
you
nowhere.
were you able to do that as a bank employee, like the other people's financial books?
Of course, I had to let the bank know that I'm starting this side adventure. And it wasn't like during the bank hours. No, of course not. But yeah,
Mm.
so I would go work at a bank, and then after the working at a bank, I rented a small office space, which was just one room, and then I would go and work in my office and see clients do their bookkeeping, do their taxes, and things like that.
Interesting. And you did that for how long before you transitioned from the bank to focus on this full time?
I actually did. So again, the town was so little. Like if I'm being honest, I probably made from my side hustle maybe $3,000 a year.
Yeah.
That's how
Okay.
little it was. But I actually left the bank when I moved
Okay.
to from Alaska to Florida. And once I moved to Florida, I dabbled a little bit in insurance, started my own business in insurance, and then I was like, oh my goodness, insurance is not for me. I'm going to go back to my roots. I love accounting. So, and then I decided to go full time in accounting. But as even to this day, the people that I started with back in the little town, they still do
Yeah.
their taxes with me.
Interesting. Interesting. That says something about the quality of service that you give them. So that's good. And I mean, when you decided to focus on this full time, right? I'm sure you worked with hundreds and hundreds of businesses, right? People say, and it's something you hear generally that accounting is the language of business, but you find that so many business owners and entrepreneurs actually try to avoid learning this language. Why do you think that is?
Well, accounting is its own language. It's a lot of jargon, accounting jargon. And what I realized, when a business owner comes over and I'm explaining everything in my terms, in accounting terms, they never took the class to do their accounting vocabulary. They're just sitting nodding their head. Yeah, yeah. And I'm like, you're not understanding. So let me use the everyday language that
Yeah.
you would understand,
Yeah.
because just in general, like in any industry, you have your own language, but especially in accounting, there are like bigger words that most people don't ever use in their everyday life.
Yeah. Yeah. I mean, yeah, I'm a chartered accountant myself, and
Hmm.
before I studied for the chartered accountancy, I didn't have a, I had never taken any accounting course. I had a science background. My bachelor's is actually in biochemistry. So yes, once I remember my first accounting class, and we're talking about the basics, profit, losses, assets, liabilities, and things like that. And, I had to personally, interpret it in an everyday language to kind of, quickly get up to speed. And you see, if you have something that's going to generate you money in the future, then that's an asset. If you have, obligation to pay somebody some money in the future, that means you have a liability and things like that. So I do understand, what this might feel like, right? But you always speak about how, for example, tax meetings can be quite stressful because a lot of people, aside accounting, tax is another part of business that a lot of people, a lot of business owners try to avoid or just pay somebody to deal with, right? Can you talk about the first tax meeting that you sat in? What was your personal experience like?
Was actually a really big business in our small little town. And she came to me and she's like, can you do our taxes? And she did her own bookkeeping and things like that.
Yeah.
So once I did the taxes and I handed her and I'm like, oh, you owe this much money. And she looks at me, she literally pushes the folder back and she's like, I don't understand. You explain it to me. And
Mm,
I was like, this is my first time. She was a very intimidating lady. It was her and her husband, and they had like multiple businesses, actually multiple rentals. And I was like panicking. And that was like the first moment I realized she wants to know, like, why does she owe this money? Like, how did it get calculated? And so, like, with a trembling hand, I opened the tax return and I'm like, okay, this is how much you earn. This is from
mm,
your payroll from your job. This is from your one business. This is from your other one. And
yeah.
this is how it gets calculated and things like that. So and that's like literally when I understood that I have to use everyday language. This is your earned income. This is money you worked for. This is your unearned. This is like your investments, like
Mm,
rental properties.
yeah.
That's like literally the first year I realized I need to speak to them on everyday language.
Yeah. 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 And you then went on to start Golden Apple Agency. Can you talk a bit about what your agency does, the kind of services that you offer?
Yeah, so when I started Golden Apple Agency, I was like a one-man show, and I was actually able to buy a retiring gentleman's clients who was retiring, and he had taxes and account and bookkeeping clients.
Yeah.
So we just kind of, easy transition. Now of course, I have employees and things like that, but yeah, so we do bookkeeping services. Variety depends on the business structure they have or the business, how big their business is. Of course, tax preparation for personal to business. And
Yeah.
then we also help with IRS situations, whether it be an audit or IRS debt. We kind of become that middle person and help clients with that.
Okay, got it. And essentially, let's start by talking about some of the tax mistakes that you see people making, especially new business founders and entrepreneurs, that can impact significantly on the survival, the sustainability of their business.
Yeah, so I would say the biggest one is somebody starts a business and they focus so much on just getting the money in, like hustling and things like that.
Yeah,
And they might not have money, so they'll pull money from their personal, or then they make some money from the business and they don't have money in the personal, so they'll pull money from the business. So the biggest issue, the biggest mistake is when they mix their business and personal finances, because you can't do a tax return without the bookkeeping for a business. Those are two different things.
yeah,
And it becomes extremely difficult to do bookkeeping when you don't know if it's a business expense or if it's a personal expense.
that makes sense. And what is one, I don't know, one, two, three tax strategies that you believe every business owner should know? So a lot of people, what I've heard is, or what I've seen is a lot of people tend to overpay taxes as new business owners and entrepreneurs. Can you share one or two tax strategies that you believe everyone should know?
Yeah, so honestly, the most basic thing is people don't know what's tax deductible and what's not tax deductible. So understanding, because not every expense is tax deductible, but
Yeah.
also there's some expenses that you don't even think about. You know, a lot of times home office, it's such a misunderstood expense. What's the tax deductible part of it, what's not? That's
Hmm.
one. The other thing, and this is more of a biggest one, is that you're in the right entity. There's lots of options, but I see people making millions of dollars and they're still the sole proprietor, overpaying on taxes. The other thing is just simply not focusing on what the like our government is doing. Taxes really change every year. Something new is always coming up.
Yeah.
So you want to always be in the kind of like in the known, but it's hard with nowadays because there's so much misinformation out online.
Yeah. Yeah.
So be in the known, like like where do you need to be going? What are your business goals? Like, is there available credits for you? Is there a tax advantage for you that you can use? I mean,
Yeah.
I've had business owners actually go into something or do something just because there was a tax advantage. But if you
Hmm.
don't know that, you don't know where you're
You
going.
don't know what that makes sense. That makes sense. And you mentioned that you've seen people who generate hundreds of thousands in revenue and they still have their business as sole proprietorship. That suggests that you think that's wrong, right? What should people be doing instead once their business begins to generate significant revenue?
Yeah, well, first of all, you got to understand that all these sole proprietorships that are starting out, they make like little money. So
Mm,
when you're making over $1 million, all of a sudden you're in this big pond, but you're a really big, shiny fish that, is really shining out there for an audit. So if you move into like an S corporation, which I think every business, every person that starts a business should just
yeah.
get an LLC right away and should treat their business like $1 million business from the
Mm,
start, set those procedures in place.
mm.
And then with the LLC is on a state level, not the IRS level. The IRS
Okay.
level says, okay, you're an LLC, but how do you want to pay your taxes? So with an LLC, you're actually able to move by filing your taxes from the sole prop to like an S corporation or even a C corporation if that's a better option.
Mm,
But pretty much the having the right entity is really important. That's when you're not, that's when you can be sure that you're not really overpaying. But also once you move in, now you're more on the same level. And so you're not this huge big fish like that can
mm.
be easily spotted, It's
That
like
makes sense.
also kind of even the playing field for an IRS audit.
Interesting. So what you're saying is more from how you would compare to other people in the same pond, right? If you're a business that's making $1 million, for example, and you're a sole proprietorship, you would be making significantly more than most sole proprietorship, and so you are an easy target for an IRS audit. Whereas if you had an LLC, then you would be around the same size of every other business, and so it's a bit harder to get identified for an IRS audit. Why
So
is
not an LLC because the LLC is on the state level.
and
It would be
okay,
it would be an LLC filing taxes as a sole proprietorship, and then you can move into the S corporation or a C corporation.
interesting. And what are the biggest tax differences between a sole proprietorship and an LLC filing as a sole prop?
Probably the biggest one is whether you're in a sole proprietorship or even a partnership, all of the net income is your personal earned income. That
Yes.
means you are paying self-employment taxes on it. When you switch and you're like at an S corporation, you say, okay, this is my earned income. I'm on payroll. I receive a W-2, and the
Mm-hmm.
rest is my investment income in the company. So
Mm.
automatically, you're not paying that as self-employment payroll taxes. So that's automatically more than 15% tax savings just right there.
Just right there. Interesting. Interesting. Another thing you mentioned is the difference between S-Corp and a C-Corp. Can you speak a bit more about that?
Yes, so an S corp is really a good idea for someone who's like a single owner of the company, or maybe like a two owner people, like we have siblings, spouses, whatever. But as long as it's under 75 people in general, you can have an S corporation. The biggest benefit of it is that usually, well, I can't speak for all the states, but for on the federal level, the S
Yeah.
corporation does not pay any taxes. Instead, it gets transferred over to the shareholders, so the owners, and then they pay taxes on it as the investment of their companies versus
Ha.
a C corporation.
Mm-hmm.
It's a completely standalone company, but it has other benefits when you are in a bigger, multi-million, eight-figure business, then there's other tax strategies you could do. But
Yeah.
a C corporation, it's a completely standalone. It pays its own taxes. And then whenever the shareholder takes money out, it's also taxable to them. So with a C corporation, it's like a double taxation. With an S
Yeah.
corporation, it's not.
I like this conversation. Again, I just want to reiterate some of the things that you've said. It looks like you've now laid up three different business structures. There's the sole proprietorship, there's the S-Corp, and then the C-Corp. A sole proprietorship, you get taxed on every amount that your business makes. It assumes that all of it is your income, so you get taxed on the entire income. If it's an S-Corp, the business makes money, but the business itself does not get taxed. Instead, all the profit of the business flows to the owners, and they can then split the income between actual earned income, which is like their salaries and things, and unearned income, which is like investments. And so they would pay less tax because they're essentially only paying taxes on the earned income. Is that right?
Correct. Yeah.
And then the C Corp is kind of the highest tax bracket because the business will get taxed at the corporate income tax level. And then when the dividends or let's say the profit flows to the shareholders and they make drawings out of the business, they also get taxed on those as personal income taxes. So that's double taxing on the same amount.
Correct. Yes. So that's where the double
Perfect.
taxation comes in. But
Perfect.
however, because it's much bigger, there's more options, more opportunities for other tax strategies.
Yeah. Yeah.
It's going to be impossible to cover them in one podcast.
Yeah. Yeah.
But in
Yeah.
general, each entity has its own benefits and not so well benefits. So it's
Yeah.
really important as you grow, you move into the correct entity.
For you, yeah. So what kind of business do you believe should be let's talk from say an income level or any other metric that you think is appropriate. But what kind of business do you think is best suited to remain as a sole proprietorship? What kind of business should transition into being an S corp? And obviously, if you're like a $10 million and above business, you'd probably be a C corp. But let's talk more about the fit for sole proprietorship and S corp.
Yes. So the first thing I think that every business should at least be an LLC, not a sole proprietor, because with a sole proprietor,
Okay.
it's just your name and your social. But you
Okay.
should, if you're starting a business, definitely set it up, start running it as a business, get your LLC, get your EIN from the IRS, your tax number. So you're not using your social,
Mm,
things like that. But I found that the break even point where it becomes beneficial is if your business starts making gross income of over 150,000. I would
mm,
not recommend anybody switching to an S corporation if you're making, excuse me, less than $100,000. If you're making less than $100,000, you should always stay and be taxed as a sole proprietor because you do have the additional expenses of
mm.
doing the business tax return, of running
Yeah.
the payroll. So it doesn't become beneficial unless the business itself really gross income is over 150.
Interesting. But you also said that every business should start off as an LLC. So I feel like is there I don't know, does
Remember,
that
the LLC has
conflict?
nothing to do with the IRS.
Yes,
The
yes, yes. Like
LLC is just you
on a
setting
state,
yourself
yeah.
up and saying, hey, I am a business. This isn't a hobby. This is taking steps, distinguishing yourself, setting yourself up as a business, doing those initial steps. Like I said, you should run your company from day one as $1 million company.
Yep,
Set those
yep,
processes up in time because it's much harder to change something, to switch something as you get into it and we build habits. And then it's harder
yeah.
to even break habits and things like that. But the LLC is just on the state level, not the IRS level. And the LLC can switch from being taxed as a sole proprietorship, and then it could switch to being an S corporation. So that's why I
Okay.
recommend an LLC.
Okay. Now this is very clear, right? So essentially, as an LFC, you can be taxed as either a sole proprietorship or an S-Corp. So your advice is every business owner should start off their business as an LFC, but remain a sole proprietorship until they have like $100,000 in revenue, and then once they hit that $100 to $150,000 revenue mark, they should then transition to being an S corp. Does that
Correct.
sound right? Perfect, perfect. Now, I want us to talk about something that's been making the wave recently, which is, as you know, the big beautiful bill
Yeah.
and the tax implications. Can you talk about some of the tax implications that are relevant to small businesses and even larger businesses?
Yeah, where do we start? Because there's so many.
Yeah,
The first thing to know is, unfortunately, somebody hears something and they just run with it. So, unfortunately, there's a lot of misinformation. I already have clients calling, and I'm like, no, 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 that's not true. Wait a minute. That's not exactly what's being happening. But
yeah,
I found that the biggest benefit, and this is more toward the bigger companies, the biggest benefit that I see is the commercial property purchases is tax deductible in that same year. So say someone buys an office building
yeah,
and they buy it for like $200,000, they can deduct the full $200,000 through depreciation, through the bonus depreciation on their tax year. So if they are having a really good year in money wise and things like that, and they're like, I need to offset my income somehow. If they buy, and again, you can get a mortgage, you can get a loan. It's not that you pay for the building. So the cash
yeah,
flow is different than the taxes.
yeah,
Then they can deduct that. And in reality, if you buy a commercial building, the depreciation is over 39 and a half years. That's a long
exactly.
time
Yep,
to be claiming little bit.
yeah,
So now, and I think what really is just the focus to get commercial buildings back up and running because of COVID. Everybody's trying to work from home. Nobody wants to go to the
yeah,
office and things
yeah,
like that. But I think that's the biggest one. Of course, there's a lot of little things, in there. For example, this is a unique one. If you have a small business and you have an office and you're providing like coffee for your employees. So, like break room stuff, little things like that.
mhm,
It's no longer tax deductible starting next year.
hmm,
So if you provide it, again, it could be still a business expense, but it cannot be a tax deduction starting next year.
interesting, interesting. Any other changes?
Yeah, there's lots of things. Just like I said, it would take so many. But I mean, of course, they extended the depreciations we could continue to claim, and they were supposed to expire in 2025, so they prolonged that. I would say on the personal side, the biggest one is, of course, everybody's talking about it, is the no taxes on the overtime or tips.
Tips?
However,
Yep.
everyone needs to understand it's not all of it, it's just a limited amount, and your total annual income has to be less than a certain amount, and then it goes lower or completely goes away. But also, it's just federal taxes. So if you're living
Mm,
in a state that has state income taxes, those are still to being taken out. Your Medicare and your Social Security, that's still being taxed. So it's not as a blank cover, it's just the federal part, and you have to qualify. And then the other thing with standard deduction versus itemized deduction, you can't take both. You have to take one or the other. The standard one, of course, the IRS just tells you the amount that you can claim.
yeah,
With itemized, you could say, no, I actually have more expenses, more things that I paid for. And right now it's like really high, so it's hard to come up with that. But one of the biggest things, actually, yeah, one of the biggest things is donation, which if you donate to a church or a nonprofit or
yeah,
wherever you donate money to, that's on top of your standard deduction.
yeah,
So that's huge because
yeah,
if you have like a paid off house and not no big interest bill, it's going to be hard for you to reach that limit to
yeah,
actually, claim those donations. So that's really good. And of course,
yeah,
the other one, which I think everyone is excited for, is the car interest loans.
yeah.
You buy a car and, it can't be last year's. Have to buy a new one now. But
Mm,
now the interest is tax deductible, which I think is huge because I don't know anyone who has a paid off car in all reality.
Yeah. But wasn't that always tax deductible? Interest on, I mean, if it's a business car that you use, for the purpose of generating revenue and things like that, that's like a business expense, right? And so wouldn't it be
Yeah,
tax deductible?
yeah, there's a lot of confusion when it comes to a business car and things like that.
Mm, yeah.
It can only be a business car 100% if you have another personal vehicle.
Mm,
So yes, but you had to prove it if you were ever audited that it was 100% for business. You didn't use it for personal at all, and
mm,
you have another vehicle for personal use in order to claim
interesting.
all of that.
But
Otherwise, you're
now
better
you
off
don't have to do that.
claiming, well, no, business and personal are completely separate things still. So the tax deduction for the interest is on the personal car, not the business.
Okay.
But
Okay.
the business, yes, if you use the car for strictly for business, like you have employees drive it, you don't even drive it, then yes, all of that was deductible and still is deductible.
Interesting. So what you're saying is what we what a lot of people find in the news is the big beautiful bill is all, it's all gloom that it's gonna increase your taxes and things, but it sounds like there's actually some good stuff in it, right?
There's
What you just
actually a
spoke
lot of
about.
good stuff. For
Yeah,
the
yeah.
average, like average American paying
Hmm.
taxes, it's yeah, there's lots of better stuff, For like the business owner, there's some benefits and things, but I feel like this particular taxes was more beneficial on the individual side.
Mm, okay. Interesting. So, I mean, if people want to get more educated about taxes generally, especially business owners, if they want to get educated about taxes, what are some resources that you recommend?
Well, I definitely recommend the IRS website if they feel like learning. But if you have a business, you should have an accountant.
Okay.
For us, we have to study the tax laws every year. So we are constantly being updated. We are constantly learning. We're constantly in the known. It's hard when you're not in the accounting world, when you're not required to take so many
Yeah,
classes to learn it. It's hard to kind of maneuver it yourself. And again, there's with reading the tax laws and things like that, it's definitely all legal language and all accounting language. So it's like, what
yeah,
am I looking at? What am I reading?
yeah,
What did I just
yeah,
read?
yeah, yeah, yeah. There's definitely value in having a professional on retainer. That's also a myth that a lot of people have, a lot of business owners have, that it's expensive to have like an accountant or a tax professional on retainer, or to have them do your taxes and things like that. And a lot of people want to try to DIY the taxes and bookkeeping. What are some hidden risks that you find there? And two, what do you say to that, I don't know, notion or misconception that accountants and tax officials are very expensive to have, especially for business owners? Do you find that to be true for new business owners?
Yeah, actually, I'm pro DIY at first because you don't have money, but you have
Okay.
more time. So
Yeah.
I actually do have a DIY program that teaches business owners how to kind of set your own bookkeeping, what's tax deductible, what's not, kind of just basic knowledge.
Yeah.
But once you spend more time working on the business, because accounting, you're gonna just spend more time on accounting. That's taking time away from you actually making money.
Yeah.
You should definitely start working with the business with a professional. However, I know that finances are the heartbeat of every business, and no matter how big you get, you should always be involved and in the know with your
Yes.
finances.
Yeah.
Whether you're
Yeah.
doing it by yourself with a professional, however
Yeah.
that is. But the other thing is, like you said, people want to save money and they don't want to, hire someone and they're expensive and things like that. I have customers come to me who have been doing DIY when they shouldn't have been doing. I say you can do DIY if you're making like under $50,000, under
Mm,
$20,000, because then if you get, if you did something wrong and things like that, the penalties are much lower than if you have like a $500,000 business and you were
yeah.
doing DIY and you did all these things wrong, your penalties would be much bigger,
Steeper. Yeah.
so that's something you need to think about, and it's different for every person. However, like I said, we help customers who are doing IRS audits. I've had customers come to us for the help with an audit who were doing the DIY, and I'm like, no, this is why you got audited. You can't do this. This is not
Mm,
how this works.
mm,
And then of course we negotiated with the IRS, we fix it, we move things around. We're like, no, this is what happened. They were doing DIY. But just because you don't know the law does not mean not excuse
exempt
you
you.
from it
Yeah,
either. Yeah.
yeah, yeah,
So
yeah.
then we like, rework it and they're like, this is what it is. This is what we actually agreed to and things like that. So it's a lot of like negotiations with the
Mm,
IRS.
yeah.
But so I always say people saving dollars and then pay thousands.
Mm,
It's much easier to, pay the dollars and then save the thousands.
mm. That makes sense. For anyone who isn't still convinced yet, right? Can you talk about some of the risks that are hidden or that can be easily overlooked when someone is trying to DIY at that size that you referred to, the 500K?
Yeah. No, I'm gonna say if you are over $250,000 a year, I
Yeah.
highly, highly recommend you work with a professional. There should be no reason why you're doing this DIY services.
Mm,
But I think the biggest is just really not knowing, like you're running your business, you're operating, you don't have the time to study the new laws, you don't have the time to learn the new laws and things like
yeah.
that. And then what was available last year may not be available this year, because like I
Yes.
said, it changes every year. And then you submit your tax return, and all of a sudden, you're sticking out like a sore thumb because the
Hmm.
laws changed. You're going to get audited. And again, audits are no fun. You
Yeah.
know,
Yeah.
had a front row seat to all of them.
Yeah. I can imagine. And there are a lot of business owners that have been DIYing their taxes. They haven't been audited, but they probably done things wrong. Is there anything you think they should do before, they get audited to try and correct or, just self-report their
Yeah.
mistakes?
I would say, I mean, the whole reality of you being audited is a very low chance to begin with, just in general, because so many people are like, oh no, I'm gonna get audited. In
Yeah.
reality, you being audited in a lifetime is
Very low.
pretty low chances. Let's just be honest. Unless you get audited and they find something wrong, well, they're gonna keep an eye on you.
Uh,
Yes, so if you have filed a tax return and then you find a mistake, there's definitely something you can do. You can amend your taxes, which means correct it. Uh,
mhm.
but in general, I always say just make sure you keep your records. Save those bank statements. You might close a bank account. People are like, "Oh, it's available. I can get it on my bank at any time." That's not always true. The bank could be sold to another bank, and then you have to wait months for your bank statements.
Mm,
So always, always save your bank statements and then save all of your receipts. So
mm.
that way, if you do get audited, at least you have the documentation, the support documentation to kind of show the IRS where you were standing, what you were
Yeah.
doing, why you thought this was, deductible and things like that.
Interesting. And does this apply to individuals as well, or is this strictly for businesses?
Yeah, individuals too. Like if you are doing deductions, like donations,
Yeah.
like medical bills, if you're doing that, some other deductions, or if you're like bought like a electric car and you're getting claiming the
EV
credit.
credits, yeah.
Yeah, definitely keep the supporting documents.
Interesting. So anything that's not standard, you should want to keep document with that just in case you get audited sometime in the future. That's good
Correct.
advice. Now let's talk about being audit ready. You speak about that a lot. What does being audit ready mean, and what does it look like in practice?
Yeah, so again, just be prepared, have your documentation, save those bank statements, save the credit card statements. And I always recommend, there's so many options online right now to like OneDrive, Google Drive, Dropbox, where you can save all those documents where you don't have to keep them in the paper format, but save them online with, protected password and everything. But being audit ready is literally just tax having your receipts organized, having your bank or statements organized,
Yeah.
being prepared. If you know that you claimed something like, for example, travel is a big one, right? So if you're traveling for work for your business, save all that. Write it down what you got, what you did when you traveled. What kind of work did you do for your business? Because
Yeah.
if you get audited 2, 3 years later, you're sitting there like, what did I do?
I can't even
you know?
remember this. Yeah.
But yeah, if you save the receipts, if you like have the files organized, you're like, this is
Yeah.
my folder for my bank statements. This is the credit cards I used while I was traveling, whatever, you know?
Yeah.
Also, a big one is write yourself an email because that gets date stamped. You know, like when we
Mm,
have customers and we do their bookkeeping and they travel, I literally tell them send us an email telling us you're traveling, what's the purpose and what you're going to be doing there. And that way it's date stamped. So it's not like something I just sent it.
mm,
No,
yeah.
it has a date stamp. The emails are PDF printed and we save them
Yeah.
for them, you know, so they if they are audited, they're ready. Our documentation is
Yeah.
prepared and ready.
That
We're
makes
ready to go
sense.
and prove our expenses.
And they can also attach like, travel booking confirmations, evidence of payment, all of that to that email. So again, it also gives credibility to that claim.
Correct.
Yeah, yeah, that makes a lot of sense. Now, so say one strategy that I know that business owners sometimes do is they DIY tax filing and everything, and then if they do get audited, then they hire a tax accountant, a tax professional, and or an accountant, to help talk to the IRS and things like that. Do you think that's a good strategy, or is it better to have your tax accountant already working with your business, before, if at all, they then need to speak to the IRS on your behalf?
So, I would say not all tax preparers are made equal per se. There are some tax preparers who, you know, specialize in tax preparation. Doing an audit that's a completely kind of different. It would be great if the tax accountant that you're working with is also able to represent you.
Yeah,
But a lot of times a tax accountant is just a tax accountant. So like I'm an IRS enrolled agent. That means I can
yeah,
represent anyone in any state. With some people being just a tax accountant, they can't. Of course, CPAs and attorneys can represent.
yeah.
So, but if you just have a tax professional, they can't represent you even if you wanted
Mm,
them to. But the
okay.
reason why we can represent is we do take those additional classes. We do take those additional training. We do know the audit process and things like that.
Okay.
And the other thing is like you want someone who is knowledgeable, who understands the audit process. So
Yeah,
whether that's your accountant or not, that's up to you to decide, really, you know, to figure it out.
yeah.
Of course, it's always better to work with a tax accountant that can represent you in case of an
Yes.
audit. You know, for
Yes.
example, like I have like 10 employees. They do tax returns. It's going to be impossible for me to do all of them, right?
Yeah.
But if one of our customers, whether my employee did a tax return, is being audited, then I'm the one who steps in and completes the audit.
Got
The
it.
the thing about audits, though, most people don't understand that audits are very emotional.
Mm,
Just for the emotional part, I always recommend you not doing the audit alone because it's your money, it's your livelihood. It's hard for you to even explain the situation because you're emotional about it, you know? For me, I'm just looking at numbers. I'm looking
mm,
at the situation. My emotions are not tied into this money, just
yeah.
like the IRS's agent is not. And of course, my goal is to get the best outcome for my
For
clients,
you.
right?
Yeah. Yeah.
So I'm
Yeah.
looking
That's
at it
right.
from all perspectives on a logical level and understanding what the IRS is going to want and not want. But when you're emotional, because again, money is very emotional to everyone, you
Yeah.
know? It's like I said, it's your livelihood. So when you're emotional, you might accidentally say too much information.
Yeah. Oh, that makes sense. That's actually good advice. If a founder or a business owner finds out that they owe taxes that they are not able to pay immediately, are there any options that they can explore?
Yeah, the first option is really setting up a payment plan. The IRS does allow a payment plan. It depends on how much money you owe. There's also could be like, for example, there's people that have lost their jobs or like fell medically ill and things like that. There's called something that's currently non-collectible. Of course, you have to
Mm,
prove that you currently have no money, you know,
yeah.
so they kind of freeze your account and not collect.
Mm,
But for the most part, there is payment plans.
okay. And how large do these fines and penalties get if you do get fined by the IRS or if you're found to have filed wrong taxes?
There's no like a one flat rate or one flat percentages. It depends what the penalty is, what they findings are, and things like that. And in general, how fast you can pay them, because there's penalties, but there's also interest. So
Yeah.
interest continues to occur. Penalties is a one-time thing. So the longer you ignore the IRS bill,
Yeah.
the higher it's going to be.
Yeah. But it could be quite significant, right?
Oh, yeah. Yeah.
Yeah. Yeah.
Especially like if we get into payroll taxes and things like that, those are
Yeah.
much, much higher.
Interesting. Yeah. So for anyone watching this, you probably don't want to take risks with taxes, right? You want to do it right from the start. And I'm gonna leave a link to your firm, Golden Apple, in case anyone wants to get in touch to have you help them sort out the tax part of their business, right?
Of course, thank you.
Yeah, I have a couple more questions for you. One is, as an entrepreneur and also a tax expert, how has having perspective from both of those angles, being an entrepreneur, having your own business, and then being a tax expert that deals with other businesses, how has that influenced how you run your business?
Well, I got to see, the good and the bad. I've personally made mistakes, so then I advise my customers not don't do
Don't
mistakes
make
like
that
I have,
mistakes.
It's really beneficial because I have more of an insight versus I'm just by myself. And also the different industries. Take a pen, for example, the ball pen, the little roller. And then we have deodorant sticks with the little ball roller. It's the
Yeah,
same concept, but completely different things.
yeah,
So
yeah,
having not just being stuck in your own little lane, but kind of having more of a bigger view, what's businesses doing and how they're running it, really gives me an advantage to
yeah,
consult my
yeah,
clients.
yeah. That makes sense. That makes sense. If someone were to only watch 10 minutes of this conversation, what is the one thing you want them to take away from this conversation?
Start from the beginning, like you're running $1 million business, even though your account is in the negative or you're not making any money yet. Start recording your processes. What are you doing? If you don't record it, you don't know how to fix it. If you don't track it, if you don't track your finances or your marketing, you don't know where the money is leaking. So the one thing probably to take away is you need to track everything and record everything to make better
Perfect.
business decisions.
Perfect. Perfect. Thank you so much for sharing your insights and for coming on the show today, Tanya.
Thank you for having me.
And if people want to connect with you, where should they go to?
My website would be the best way, which is goldenappleagencyinc.com.
Okay.
And you're able to send us a message, get in contact with us, give us a call, either way.
Perfect. Thank you again for coming on the show, Tanya.
Thank you so much for having me.
Yes. And see you guys in another episode of the Business 101 podcast.